I just took $20,000 and bought Nike stock. Welcome back to Strongman Personal Finance. So, one of the most iconic brands in the United States that basically everybody in the US and around the world recognizes had some tough times. As a matter of fact, over the last 5 years, the stock is down 12%. Now, as normal investors operate, when a stock goes up, it's good, and when a stock goes down, it's bad. But me, being a more clever, astute investor, I believe that when stocks go down, that makes them cheap. Therefore, Nike, which has dropped 12% in the last 5 years, must be cheap. Let's go ahead and look at some interesting things that I noticed about Nike. Keep in mind, the stock is down 12% in the last 5 years. Even though it's down 12%, we can see revenue is up pretty significantly, okay? In the second quarter of 2019, it had $10 billion of revenue, and now it has $12 billion of revenue, okay? If we go down to pre-tax income, we can see that pre-tax income for Nike is up from $1.2 billion to $1.4 billion. Net income is up from $989 million all the way to $1.17 billion. Shares outstanding. Shares of Nike have dropped from $1.57 billion to $1.51 billion. So net income is up. Revenue is up. Shares outstanding are down. What does that tell you? Well, something's wrong with the market because Nike is better off financially than it was 5 years ago. Let's go ahead and look at some ratios, okay? The price to earnings ratio is the lowest it's been in 5 years. Why is Nike's PE, price to earnings, so high? Because it's an iconic brand, okay? It's a U.S. stock. It's a quality brand. Nike ain't going anywhere. The PE is now at 22.19. This is the lowest it's been in 5 years. Price to sales, lowest it's been in 5 years. Price to books, lowest it's been in 5 years. Price to free cash flow, lowest it's been in 5 years. Do you see the trend here, ladies and gentlemen? This stock is cheap because it dropped, and it is an iconic brand. I am putting $20,000 of my mother's money into this stock. Yes, I manage her retirement account, okay? This is the deal of the century. Let's go ahead and see why the shares plunged, because Wall Street just doesn't understand. They just don't get it, okay? Nike shares plunge on disappointing guidance. Guidance, oh wow, it's a guess. Wow. An iconic brand had some bad guidance for one quarter. Oh, let's sell the stock. Is this a slam dunk opportunity to buy the stock? Buy. 20K, all in, baby. I'm buying the dip, and I'm going to wait till it rips. So, the reason the stock dropped was that it projected a sales decline in fiscal year 2025. Now, if we go back and we look at the income statement, now the annual income statement, we can see that Nike has had growth, positive, revenue growth every single year except for 2020, understandably. And now we're having, after a year and a half of interest rates being high, the economy might finally be slowing down a little bit, and that causes revenue to drop because people aren't going and spending their money on discretionary stuff. We have inflation. We have a slowing economy, okay? What does that mean? Well, when people don't buy stuff, that hurts companies like Nike. But when the economy starts to get too bad, the Federal Reserve cuts interest rates, money gets cheap, multiples expand, and people go and buy stuff. That's right. So Nike's PE, while it's low now, is going to expand once rates are cut. Look what Nike's PE went to when rates were cut, when rates were near zero. It was in the 40s, all the way up to 60. Okay? Do you see the incongruency here? This is a temporary dip. Nike will vertical line, not financial advice. Buy my course. So let's go ahead and look a little bit more of the earnings. Full year revenues were $51.4 billion compared to $51.2 billion in the prior year, up 1% during high interest rate environment where everybody's getting hurt by inflation. Inflation's going down. Interest rates are going to get cut. What's going to happen? Vertical line, not financial advice. Okay? Fourth quarter revenues were down, were $6 billion, down 2%. Oh my God, they're down 2%. One quarter, they're down 2%. They're one of the most iconic brands in the world. Nike direct revenues, this is like direct sales, like Nike branded stores, are down 8%. Uh-oh. Never gonna recover. Wholesale revenues were up 5%. Okay, so we got Nike direct going down, but we got wholesales going up, so they kind of balance each other's out, okay? Gross margin increased 110 basis points to 44.7%. Despite having decreased revenues, they still increased gross margin, which is at the top of the income statement, okay? Pretty impressive. So the CEOs, whatever, gave commentary. Okay, let's go ahead and dive a little bit more into the metrics and the financial statements. So here we have the financial statements. We can see that revenues are down 2% for the entire company. But cost of sales, this is the cost of the items that they're selling, is down 4%. So if your costs drop faster than your revenues, you can still grow your profits and your earnings. That's right. Even a company with flat revenues can grow their profits. Demand creation expense, completely flat. Operating overhead, they've cut overhead, okay? Revenues are down, but somehow their profits are going up. Crazy. It's almost like Nike isn't dying. It's got very healthy profits, okay? Very healthy profits. As a matter of fact, their net income margin is 11.9%. Despite negative 2% revenue, they had 11.9% profit margin. Man, Nike's going to zero, bro. Let's look at their balance sheet. Total current assets of $25 billion. They have $25 billion of mostly liquid assets, okay? They have almost $10 billion of cash, almost $2 billion of short-term investments, and almost $4.4 billion of accounts receivable, money they're about to collect from sales they already made. Their inventory has already dropped 11%. When inventory drops, that means they're generating sales. They sold the inventory. That's good, okay? You compare their total current assets of $25 billion to their total current debts due within a year of $10.5 billion. Oh my God. They could basically pay off all of their short-term debts right now with the cash and short-term investments they have on hand. Pretty solid balance sheet. If you look at their long-term assets, long-term asset light. Okay, property, plant, equipment, $5 billion. Leases, $2.7 billion. Goodwill and intangibles, almost insignificant. So when you look at the balance of this company's assets, it's mostly tangible assets, cash, short-term investments, not basically fake assets like goodwill, okay? The only thing that is even slightly, and it's not even a concern, but it's like something that you have to be aware of, is these deferred income taxes and other assets. Deferred income taxes are basically tax savings you expect to receive in the future. But those can change depending on changes in tax rates, okay? So while that is kind of a judgment call, at the same time, it's not a significant portion of Nike's assets. The vast majority of Nike's assets are in short-term liquid assets, okay? I would say that's good because long-term assets have a lot of upkeep. We look at long-term debts. They got $7.9 billion. They reduced their long-term debt by 11%. Man, it is over for Nike, okay? Let's see. So they have a bunch of metrics here, okay? We can see in the United States and North America, they had a negative 1% drop in sales. Europe, Middle East, and Africa, negative 2%. Greater China, 3% increase. And Asia Pacific and Latin America, 1%. Look at their diversified revenue streams. Wow. 10x, guaranteed, not financial advice, okay? Then we got the Converse brand, which unfortunately hasn't done that well. I don't like Converse myself, so whatever, okay? But overall, this company is not collapsing to zero, okay? There's not like a replacement for Nike that's just taking over and eating their lunch. Who's eating Nike's lunch? No, I'm serious. If you could tell me, please let me know. So overall, I'm insanely bullish on Nike. I'm putting $20,000 into it. Trust me, bro. And I think this stock could be an easy double, because I just think so. Have a wonderful day. Cheers.